Market volatility could create a buying opportunity for Microsoft stock. With big tech's hot run losing momentum, Microsoft shares have pulled back. Further near-term volatility for Microsoft and other tech giants isn't out of the question. However, this may work to your advantage if you're looking to lock down a buy and hold position in this top AI stock. Let's dive in. Here's why Microsoft stock is a no-brainer buy if shares fall further. Welcome to Timely Investment Research. In the latter half of this month, it seems as if the big rally that has sent Microsoft stock and other big tech stocks to higher prices since January is losing momentum. After climbing to prices just shy of $350 per share, Microsoft stock has experienced a modest pullback. You may be tempted to buy the dip, but keep in mind that further rounds of volatility may be just around the corner. Macro issues continue to persist, and while stocks are officially in a bull market, it may start feeling more like a bear market once again. So, what does that mean if you own Microsoft, sell and head for the hills? No, it also doesn't mean that if you are considering adding this early victor in the battle to dominate artificial intelligence, you need to skip out on it entirely either. Here's why. Microsoft stock and the end to its hot run. Between January 3rd, the first trading day of 2023, and June 15th, Microsoft rallied to the tune of 43.2%. The main reason behind this was the company's high exposure to the AI megatrend. Today, it's still up almost 40% on the year. As one of the early movers in this space amongst big tech companies, scores of investors jumped into Microsoft stock. Some of these investors bought simply to ride the momentum. Others entered positions with a longer time horizon in mind, on the view that the financial payoff from its first mover advantage in AI would catapult Microsoft, already in the trillion-dollar club, to an even loftier valuation. Alongside so-called AI mania, rising confidence that macro issues such as high inflation and interest rates would soon ease also played a role in Microsoft's strong stock price performance. However, after a more than 6-month run, it's possible that this extended rally is coming to an end. Following recent remarks from Federal Reserve Chairman Jerome Powell, worries about inflation and interest rates and their impact on the economy are rising again. The market is walking back from its risk-on mindset, and AI mania is cooling down. Why additional volatility works in your favor? It's possible that the latest broad market pullback may continue in the short term. Tech stocks in particular could cuff back more of their 2023 gains, and Microsoft stock is no exception. That's not to say, of course, that another painful 2022-style market sell-off is just around the corner. However, if you expect to buy the dip with Microsoft and flip for a quick gain, I wouldn't count on this to be a profitable trade. That said, if you are approaching this stock the right way as a long-term buy and hold position, additional volatility works in your favor. If fear, uncertainty, and doubt keep climbing, Microsoft may experience a moderate decline in price compared to its current high water mark, $351.47 per share. A move back to $300 per share may not be out of the question, nor would a move back to even lower price levels. The opportunity to get in at a favorable entry point could emerge in the months ahead. Again, if you currently own it, the better move is to hold, not sell. In hindsight, the paper losses of today could prove to be tolerable. Microsoft's substantial long-term price appreciation potential remains very high. The takeaway: last week, I argued that Microsoft's integration of the technology behind ChatGPT leaves it poised to re-enter high-growth mode. That's not all. Growth catalysts not directly related to AI are also in play. These include a rebound for the tech sector after the recent slowdown, plus the company's expansion of its presence in the video game industry. According to a recently released court filing, CEO Satya Nadella's goal is to take Microsoft to $500 billion in annual revenue by 2030. Hitting this goal would represent cumulative revenue growth of around 136.5%, based on the company's forecasted revenue for the current fiscal year, $211.38 billion. With this, there's a clear takeaway. Depending on your time horizon, buying Microsoft stock could still prove to be very profitable and a no-brainer move if shares continue falling back in the short term. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.